Mortgage rates have doubled over the course of 2022, and I feel like the unease about interest rates has kind of dissipated over the last couple of months as everyone's used to the news. This is probably a dangerous spot to be in, as history tells us that quite often the real pain is noticed 6 to 9 months after the increases in rates start. Today I'm going to go into why doubling mortgage interest rates is a bad idea, and it's not just for the obvious reasons. First, it's beneficial for you to understand why interest rates are going up so fast. Let me put this into context for you by quickly explaining how the money system works. Have you ever seen a graph of the stock market or the property market over the last 50 or 100 years? The reason it goes up all the time is because our system constantly creates more money. The system works well when our governments can spend in case of emergencies. It's actually one of the reasons why we changed the money that we use from gold to paper, and now we even use digital money. We need to keep on creating money because that's the way the system works. The central bank's job, apart from being the lender of last resort to the normal banks when they are going so well, is to ensure the economy is kept stable. In their eyes, stable inflation is 2 to 3%. Generally, what happens is whenever you go for a home loan, the vast majority of that money is actually created. And the central bank's job is to regulate, along with the government, how quickly money is created in the economy, and that's going to control the inflation. I'm just going to simplify this and say that our economy and our governments should be printing 2 to 3% more money supply per year to make sure that the economy runs and is in its maximum efficiency. That's all you need to know. Now, fast forward to the pandemic. Every Western country's response was to print 20 to 30% of the money supply. In my opinion, when you print 20 to 30% more of your money supply, it solves a lot of immediate short-term problems, and that's fine. You can actually argue whether they printed too much or they should have printed less. This has been the issue of a lot of debate over the last couple of years, but it did actually help us financially with the pandemic in the short term. But it isn't over yet. Think about this. If to print 2 to 3% more money every year is our sweet zone, or what we should be doing to keep our economy stable, and then most Western countries print 20 to 30% of their money supply, then that is 10 times above the sweat zone. So there's going to be ramifications. All the money is now flowing through the economy, and when there's more money, the prices of goods go up, especially when they're scarce. Property is a great example of that. That's the issue. The problems that money creation solve are just short-term problems. In our current situation, we now have to deal with inflation. Why is inflation bad? There's a lot of panic created, but at the same time, a lot of people don't actually know what it means and why it's bad. The point I want to make is that not all things inflate equally. I'll use property as an example. Property's been inflating like crazy in Australia for a long time. However, wages right now in the pandemic are actually not even increasing as much as the inflation. So what's happening is we're actually losing our purchasing power. You can see this article here that wages growth is 2.6%, and a quick Google search will tell you that our current inflation is 6.1%. Basically, we're making less as other things go up. Let's tease this out a bit. Assume you're earning $100,000 a year. You buy $100,000 worth of stuff. Cool. Next year, the wage growth goes up 2.6%, which now means you earn $102,600. Excellent, your income's gone up. Not so fast. That 100K worth of stuff you could buy is now actually going to cost you $106,100. This is why inflation is bad. And generally what happens is the wealthy can weather the inflation because they're wealthy, but the poor can't, and that puts them into hardship. The risk here is that these people are put into hardship that gets turned into generational hardships. Their kids are poor, and then their kids' are poor. We don't want that, do we? So one question here is about the printing of all this money. Since no one's income's going up, who's getting all the money? Obviously, it makes sense that the wealthy people have all the cash. So there you can see that inflation is a real problem. What do central banks do to fight it? The way I see it, it's such a problem because central banks thought this was just transitionary inflation, meaning experts expected that it would come down faster. They believed it was just the war in Ukraine and the people coming out of lockdowns. Actually, I agreed with them, and I kind of still agree with the notion that a lot of this is inflationary, because I think inflationary can mean a longer period of time than what they've thought. Obviously, we're thinking in different time frames. Now, earlier I've said that inflation hurts the poorest of our economy. Unfortunately, that means the majority of us, because There's only a few of the really wealthy ones, and the rest of us are actually the poor ones. So the government or the central bank says, okay, we've got a problem. Now we're going to fight it. What that actually means is that they're going to increase interest rates, which is what's happening. Now, the idea of increasing interest rates will mean that the cost of debt increases. Your home loan repayments, credit cards, that sort of stuff actually goes up, and basically means we've got less money to spend. More of our daily and weekly budgets goes towards debt repayments. That means less money can be spent on goods and services, which therefore puts a deflationary effect on the things to fight inflation. I really think the central bank doesn't actually know when they've gone too far in terms of interest rate hikes. And this goes the same for when they're printing money, which I always complain about. In my view, I think they're trying to hit a bullseye with a blindfold on. And what will happen here is they may push interest rates too high. That will definitely put people into more hardship, but also if they do nothing, they're going to have inflation, which pushes people into hardship as well. This is the difficult position the Reserve Bank are in. Businesses will not be able to borrow as much because if interest rates continue to go up, it reduces their borrowing power. In return, they have to raise the cost of their goods and services. We're seeing that now. I paid $25 for a burger and chips the other day, which is pretty crazy. It means that if things go up in value, people will eventually stop buying a $25 burger and chips, which means businesses will have to make less money, which also means they'll have to lay off staff. This starts spreading around the economy, and once people start getting on the same page, people actually start holding their money because they don't know how bad things are going to get. People will save as much as they possibly can because they've got to think about what they need to pay for in the coming months, like electricity, food, petrol, etc. So this is the crux of things. How high does the Reserve Bank go before it's worse than doing nothing? What I think is they're going to try and take the lesser of two evils, which is increasing rates and let the economy crash rather than having to deal with runaway inflation. We've also got the other side, and that is when they realise that it isn't working. Interest rates will have to be eased, and the Reserve Bank will continue to print money at more than 2 to 3%, which actually has been happening now for quite some time. I'm actually a believer in cycles, as I've observed that over the years, the economy gets too hot, we get inflation, the central bank raises interest rates, it crashes the economy, you get a recession, then governments can come in and print more money to rescue everyone from the recession. The problem here is the speed at which governments are tinkering with these things, and it makes things more volatile. The issue is the wealthier you are, the easier you can weather this. But the poorer you are, the harder it is to deal with the volatility of the economy. So generational poverty is a real risk, but that is the downside of the government mismanaging the economy over a long period of time. Okay, this is the important part of the video, and it's what I think you should take away. And the takeaway is that the bad times can happen anytime. I know we've lived through a lot of prosperity, but bad times can happen. There's just too many things out there out of your control. So the takeaway here is just to be more responsible with your finances. As I said, we've grown up through a Goldilocks period, and that's cushioned us from some of the harsh realities of the world. And the fact is that there are winners and there are losers. I believe that the volatile times that we're going through means that a lot of people who thought they were winning are going to realize that they're actually losing. If you love this video or there's something that really rubbed you up the wrong way, please like and subscribe anyway, and leave a comment so we can have a healthy discussion about it. Till next time, cheers.